what can we expect in the coming week?
Yes,
So,
boss.
yeah. So looking at the dollar, we had a strong rally last week, which was facilitated by the Federal Reserve and most of the central banks. They all rallied together with the Federal Reserve. The stimulus action which happened, pumping money into the market, reducing the interest rates to basically 0% for the Feds. So that's why we saw that huge bullish move in dollar. So when such things happen, we need to learn from it. It's not a case to say, no, the dollar is economically strong. No, it's fundamentally strong. It's fundamentally induced to make that move to the upside. You see, they're trying to curb the disaster that's inevitable now. You see, recession is inevitable now in America, irrespective of whatever they are doing, whatever is going to happen in the next quarter, fourth quarter, or next 24 months. The seeds have already been planted. It's going to be a hectic period for the American economy. So, in terms of long-term buyers, the dollar is not going to go. I don't think it's going to go any further than what we have seen already. Like for the remainder, probably.
I actually think by the time the market,
yeah.
I'm saying I think by the time the market opens, there's going to be a huge rejection on that green candle.
Yeah, we can anticipate a huge rejection because there hasn't been any strong fundamentals that have happened during the weekend besides more people getting infected. But now the fact that New York is officially under lockdown also, it might have a huge impact, you see. So you can probably see most of the big guys coming in towards market open. You can see like some news releases towards market open, like what they did last week. Remember the Fed, they cut their rates just before market open. So we might see the same thing happening. Of which, if that happens, now it's a case of looking at what the fundamentals are saying. Are they anticipating to push it further high, which is highly likely? So we can probably see dollar rallying all the way, maybe 105. It can go to 105. Okay. Right now we're at 103. So now it depends now with what the fundamentals are gonna say. That's what's guiding dollar now. It's not technicals. Dollar is now being guided by fundamentals. You see?
Fundamental.
Yeah. But be that as it may, if there is nothing that has been released prior to market open, then yes, we can anticipate a rejection there on dollar index. But also take note where it closed. It closed way above at 103, 195, right? But now, if we are to look at our concept, institutional supply and demand, our strong point of interest now, the last up candle which has been broken, closed at closed at 102.36. And now if you look at the current candle, it closed way above 102.360. So now our price action candle of interest is this last bullish candle. That's our bearish order block, of which current price action, of which current price action closed way above that level, right? So now let's say price opens with a gap to the upside. The only time you're going to look at dollar index is when it retraces to 102.36 in order for it to go high. But now if it opens below 102.36, then you're looking for it to trade into 102, 306 before it pushes to the downside. Because if it gets to the downside, it means weakness is gonna come into the dollar. A market correction is gonna come. But if it gets to the upside, it means we have to anticipate another strong dollar in the coming week. You see. So now we are on a yeah.
So may I ask? You see that those two candles that you're talking about,
Yeah.
they are on a monthly basis.
Yes.
The block that we are referring to, it's a weekly candle monthly candle that has closed already. And this one that we are currently on isn't closed yet on monthly basis.
Yes, it hasn't closed, right? But we are basing
Yeah.
trades from that. So now we have to go to a weekly chart now. You see?
Weekly chart. Okay.
Remember, we have defined the bias on a monthly chart.
Okay.
You see, we have defined bias in both sides of the market. So now it depends with the fundamentals that are going to come, because there's rumor that Trump is going to shut down the stock market. You see, if that happens, then the dollar is going to keep what? Rallying.
Rallying.
Yeah, it's going to keep rallying. They will be pumping more money, you see, into the markets in order to help those companies that have been put on hold in terms of like trading, you see. So now that we have defined the bias on a monthly chart, I'm going to go to a weekly. Right. Now, can you see the weekly chart now? We still have our 102.36 level. Now look on the weekly chart where our bullish order block is coming in. It's coming in at 102.99.
99.
Yeah. So basically that's 102. We're gonna put that on an institutional price level of 103.
103.
Yeah. 103 net. You see? 103 net. So now the opening becomes crucial. If we open high, then expect price to dip down into this range. Object, rectangle. I'm gonna draw my range there. Now we are on a weekly chart now. Expect price to dip down into this range. If it opens with a gap to the upside, right? Expect market to dip down into the range between 102.36 and 103, and then it has to rally if it gaps to the upside. But if it gaps to the bottom side, if market opens below 102.36, then expect a rally into this range before we see downside movement.
This 102.360, we got it from the
Monthly
order block chart.
order block. That's our monthly order block, the 102.36.
Okay.
Let me go back to a monthly. You see, 102.
Yes, yeah, now I see.
Yeah, is our monthly order block closing price, which is this last green candle here, the last up candle, this guy.
Yes.
Right. So now we've gone down to a weekly chart whereby we have further, we've got an order block on the weekly chart. You see the last up candle, the one that saw the bear market in dollar from 2016. You see,
Yes.
bear market.
Yeah.
So we are at those levels now, of which we need to anticipate weakness coming in, because this level cannot just be taken out instantly like that. You see? So I think our best chance is of anticipating a bit of weakness coming in the dollar. But now if Trump suspends Wall Street and they keep on pumping money in the economy, then the dollar can keep rallying. You see, if they keep bailing out the large institutions, if they keep bailing out those big companies, then we can see further rally in dollar before we start anticipating weakness. So 102.36 is crucial. You see. So now everything has been set up for a recession in America. You see, everything is now set, of which it's not going to be an instant thing. This is now a highly likely scenario to pan out, a bearish dollar. You see, in the next 3 months, 6 months, or whatever, 24 months. So that is highly likely now. So whatever the Fed is doing, it might not work in the short term, but in the long term, yeah, they're clearly shooting themselves in the head, because a recession in America now is almost inevitable now. You're gonna see a bearish dollar in the coming 3 or 6 months. Are we together, guys?
No, we're still together.
Yes, sir.
Okay, let's go to a daily time frame. Right.
Ah,
You see now it's starting to make sense now. You see,
yeah,
Thursday we closed above, and then Friday we gapped to the upside, and we dipped down into 102.
That's
You see, then we had a rejection to the upside. You see, we dipped down into 102.36, then we went back up 88 pips, and we closed above. So now, if today opens with a gap to the downside, if we gap to the downside somewhere here, then expect market to
more bullish.
yeah bullish evidence into 102.36 or 103.300 if we get to the downside before we start anticipating further weakness. But if we get to the upside, right, if market gets to the upside, expect it to trade into this range before we see further appreciation of the dollar, because a gap to the upside, it means bullish momentum is still strong. You see, but if it gets to the downside, it means there's now weakness in the dollar. You see? So now that range between 102.36 and 103 becomes important. We have to take note of that range, like how price will react, of which dollar index opens like around 1:30 or 2 a.m. after all the other assets have opened. So you need to focus on USD JPY. That's the first asset that is going to open. USD JPY. If USD JPY gaps up to the upside and tests 112.39, 112.40, then expect a strong dollar when it opens. But if USD JPY gaps up to the downside towards 109.73 or 109.75, then expect a weak dollar. Just remember these levels that I marked in the first video when I said for the next quarter of the year, the first quarter, these levels will be crucial. You can see how well they are being respected. You see? So take note of how USD JPY opens for you to anticipate something on what the dollar index is gonna do. So it's not a case of just okay, no, this is happening. So, but as it is, yeah, a case for a weaker dollar is on the cards. Now we are on an H4 chart. Can you see what happened now? What is the significance of this last green candle? This one here, the last up candle, our bearish order block. What's the significance?
In terms of what?
In terms of liquidity, in terms of stops. You see what the market did? Okay.
The money lying there.
Wilson,
Yeah, what?
what is the significance of this last up candle here? In terms of supply and demand, in terms of liquidity engineering. Can you see what happened there?
Yes, I can see I think the bullish momentum is fading.
It was a fake out, I think.
Right. What really happened is this, guys. You see the last up candle, which is our bearish order block, right?
Yeah.
So in that last up candle, that's where you'd have been anticipating shorts on dollar index. Correct, right?
Yes, that's correct.
Huh?
Yes, that's correct.
Right. So in this last up candle, you'd have been anticipating short trades. Let me zoom in again so that we can see clearly. In that last up candle, you are anticipating shorts on the dollar index. Now watch H4 for gold. Can you see the H4 for gold? We've got the last down candle that comes in at 1482. What happened after that? A strong
Bullish.
bullish move of like 220 pips, which was cultivated from this. You see this rejection, this guy. So now, when you have analyzed this, okay, we are now dipping into a bearish order block on the dollar index. You come back to your, say, Euro USD H4. Can you see what Euro USD did also? The same thing. It dipped into the last down candle before it rallies to the upside. Remember, engineering liquidity for the market to rally. So this was long liquidity being engineered here. This dip into this last bullish order block, dip into close above market rallies. But obviously on Euro USD, you can see the rally looks small. This is what H4. It only rallied like 24 pips, right? But if you come back to gold, you can see that's like a trade that you would have taken, a sure trade to say, no, we're gonna rally. If you come to USD JPY and you go to H4, can you see the rejections that happened there? You see, because you're anticipating short trades on USD JPY just from this setup here. You see, clearing of engineering of short liquidity on dollar index. It becomes much clearer if you go to a lower time frame. You see, now I'm on an H1. Let me draw my, let me make it much perfect. You see, now we're on an H1 candle. Can you see the price action that's happening here? Here. You see that?
An evening star there. Clear one.
You see? So that would have been a good setup to go long on gold, go long on Euro USD, and short USD JPY. You see? 20, 30 pips, 20, 30 pips on those three assets. And it would have panned out perfectly. You see? Let me go to H1. You see the same setup. Come on, how do I remove this now?
Yeah.
Let me clear up and then zoom in. Obviously, the charts are not going to look the same, but the price action is definitely the same thing. Where's our last up candle? This is our last up candle. Can you see how it was cleared here and then price dropped down? So you as a trader now, so there's further chances that they can drop to the downside because they might not go retest this area here. Whatever they want to do, they've already done that.
In there.
Yeah. So you see now the candle that let me zoom in. You see the last up candle on USD JPY, which is our bearish order block, where you'll be anticipating short trades. Then we've got this candle here. This one. You see that candle? That's the one that clears the stops above the bearish order block. Then it closes below. The moment it closes here, that's your entry to the downside. You see here, this rejection.
Downside.
Yeah, because they will never come back to retest this high. Even if they do, they won't go above it. So now this would have been your entry, then it drops to the downside, 44 pips. Obviously, you're not going to get all of them. You get maybe like 30 pips. Then you're out of that trade with a risk of, yeah, obviously the risk is almost 1:1, which is not bad because it will be like a sure trade, which will also be supported by this bearish engulf. You come back to, let me go to gold. Let me clear up. When you come back to gold, let me go to H1 and then you can see clearly. Okay, while it's updating, let me go to EURUSD, let it update, zoom in, default, zoom in, zoom in, zoom in. Right. H4, last down candle. Where's our last down candle? There. Last down candle, you go to H1. Yeah, you see here there was a fake out now. The following hour was a fake out, anticipating, enticing people to go further to the downside. But look what happened. Then we had a strong bullish engulf. You see, this would have been your trigger now. When this candle closed, your trigger would have been here. This would have been your entry, this candle to the upside, 98 pips. Are we understanding each other, guys? You see here, it's just, we're just discussing like what we have to expect now. So the opening of dollar is crucial, you see, to the setup that we are going to be looking out for. Because I don't think we can retest above. So if it gets to the upside, then there's going to be further bullish evidence, yeah, on dollar index. But if it gets to the downside of 102.36, then it's gonna keep falling, but after like a short correction to the upside into the range between 103 and 102.36 before it goes to the downside. You see? So now, when you look at dollar index on H4, where would you, let's say market opens with a gap to the upside, post merger, right? Let's say market opens with a gap to the upside. Where are you going to anticipate price to go down to before you start anticipating long trades on your H4 chart?
Bearish order blocks would be my point of reference. I'm saying that bearish order block will be my point of reference. If price open to the upside, I'll expect it to come down and retest that area before it continues further out.
Right. If market opens with a gap to the upside, you see the last down candle, this guy. You see that last down candle?
Yeah.
Yeah.
Can you see the where it closed at? That's our bullish order block. That is where you're going to anticipate long trades. Remember, if it gets to the upside, you are anticipating market to dip down into your higher time frame order block before it continues with a rally. If it gets to the downside, you are anticipating a correction into the higher time frame order block before it pushes down. Now we are on an H4. Now we are on an H4, boss moja. That last down candle on your H4 time frame becomes your bullish order block, because if it gets to the upside, then you're anticipating bullish evidence on the dollar index. So it has to dip into the last bullish order block before we rally. And you see where that last bullish order block comes in. It comes in at a higher time frame monthly order block. Now, if you look closely, it's 50% mean threshold from 103 to 102. It's at 50%, almost 50%. I don't know how many pips are there between 102 and there's like 62 pips. Now, if you watch where this one goes, it's like at 30 pips. You see the closing price of that last H4 candle is at 30 pips, which is our 50% mean threshold. So you expect price to dip down into that candle. And then this type of price action is what you'll be anticipating. You see these two green candles, these ones, before we rally to the upside. That is if it gaps to the upside. But if it gaps to the downside, then expect market to test the mean 50% threshold before we go to the downside. Is that clear now?
Yeah, understood.
So this is going to be our trigger for the upcoming week. We need to anticipate what the dollar index is going to do. So the rest of the assets, we need to wait on what DXY is going to do. Any questions regarding dollar index?
It's crystal clear, sir.
Yeah.
It's crystal clear.
Boss Wilson, any question regarding dollar index?
So if it's going up, so if you retest that level, where did you put your stop loss? On the last order block.
Right. 10 to 15 pips below here. Oh, sorry.
Okay.
You see here, if we anticipate further strong bullish movements on DXY, so this last down candle, 10-15 pips, that's where the stop loss is going to be, because it means market is still going to what can I say, market is still going to respect the bullish price movements, higher high, higher low, higher high, higher low. You can see what's happening.
Yeah.
We've got higher high, higher low, higher high, higher low, higher high. Oh, there's no low here. Oh, here it comes in here. Then we had this higher high, which wasn't violated here. You see now, if that higher high was violated, so then we've got this higher low. So you'll be anticipating that price cannot violate this lower low if market is still going to continue in a bullish movement. But if that higher low is violated, if this guy is violated, it probably means market has gapped to the downside, meaning there's going to be a new lower low. You see, market 10, if we get a new lower low, so it will probably mean this level has been violated, so market is going to retrace to the downside. Your first target will be this candle here, this candle, this order block here. That will be your first target if you are shorting dollar index. Your second target, that order block there, that will be your second target. Is that clear?
Very clear, sir.
Boss Moja, are you right?
I'm alright, sir. I'm just overwhelmed about what I see on the market now. Here. I feel like I'm back to square one again.
Nah, not even. Don't be overwhelmed. This is out of our control, bro. There's nothing we can do. We just have to go with the flow.
Yeah.
Yeah, we just have to go with the flow.
Yeah, but the good thing is we have a system that we are following, not just jumping the market.
Yeah.
It's a good thing that we only trade when things happen.
Yeah, because now if you look at the market, mostly lower time frame levels, they are being taken out. Most lower time frames, they're being taken out, but higher time frames levels, they are well being respected. I gave an example on the group, GBP NZD. You can see how it respected a monthly order block from 2016. So if you had been looking on that pair from a higher time frame perspective, you'd have noticed that no, I can't keep going long on GBP NZD, I have to start anticipating for short trades. Whoever did that on GBP NZD, they would have come out with more than 1,000 pips, if I'm not mistaken. Same applies with Euro GBP. Okay, time is almost up. If it cuts, then you must just rejoin. Then we can discuss Euro GBP, because I know Eddie is a British pound fan. He likes that pay. It's the same thing happening to Euro GBP. It's hitting a strong level on a monthly chart, and it's respecting that level. So if time cuts up, then you must just rejoin. Then we can discuss Euro GBP and USD CHF. But for now, we now have what we have to anticipate on dollar index and what we gonna anticipate on Euro USD. And so it means if dollar opens with a strong bullish, if we anticipate further bullish on the dollar, it definitely means Euro USD is gonna go all the way to these levels here. See the last down candles. You see those three levels, they are well within reach now of Euro USD. The moment we see dollar appreciating further, then 105 on Euro USD, 1.05, 1.04 will easily be reached. So that means a weaker euro. A weaker euro will be also on the cards if the dollar is strong, of which right now the fundamentals, they are leaning on a strong dollar and a weaker euro, because Italy has been hit, guys, and we need to put that into consideration. So you can see we might see further catastrophes in Europe, countries closing borders, institutions shutting down and everything, and that will only be good for the dollar and bad for the euro. That means 1.05, 1.04, those price points, they might be under attack if we get a strong dollar. Get my point, right? Then if you look at USD JPY, let me go to my weekly chart. USD JPY, a strong dollar will only be anticipating $12. $12 will also be reached. You see that range between $12 and $14. The more we get a strong dollar, that level is going to be reached. But if we start getting a weaker dollar, then we need to look at like 109, 109.70, 109.10 on the USD JPY. Remember, these are targets that I'm now telling you guys, because we would have said dollar is strong. So if dollar is strong, what's the target on USD JPY? Right. So I was saying, if we get a strong dollar, if dollar keeps showing strong momentum to the upside, then the targets on Euro USD, you'll be looking at $0.05, $0.05 and $0.04. That will be the target on Euro USD. And on USD JPY, the bullish dollar index, then anticipate 1112.39 is your target on a long trade USD JPY. Then on gold, if we get a strong dollar, a bullish dollar, then expect a correction to the downside on gold back to the 1456, 1476 price area. But this range between 1456 and 1476 on gold, it's going to be a strong zone. Price is not going to break that zone that easy. You see? So you'll be expecting short trades on the precious metal. From which level? From probably 1520. Then you have to take gold to the downside. That is if dollar is strong bullish. But if dollar is weak, if we get a weak dollar, then expect further bullish momentum on gold all the way to 1560, 1520. You see, you have to expect further appreciation on gold. And if we get a weaker dollar, then expect Euro USD to trade back to $1.08. You expect a correction because there's now a huge liquidity void on DXY. You see, so that $1.08. Remember that level, the one we were looking for long trades long ago, becomes crucial now. If we get a weaker DXY, then expect Euro USD to trade into that zone, which is coming in from current price action. It's coming in after almost like 200 pips. So now let's look at, and if we get a weaker dollar, then expect the yen to drop down back to 109.73, 109.10, or even further to 107 in the coming week if the dollar is weak. So now let's look at euro. What is that pair now for AD? What is that pair? What is that pair? Euro GBP. Euro GBP. Euro British pound. You see the monthly levels that it's playing at and how it has respected that monthly level.
Yeah.
So you see now, the thing is, when we are trading, guys, remember, this game sometimes it's lonesome. You're gonna have to take the positions on your own sometimes so that you move forward. What I mean by that is, when you see a zone on an asset that you are following, you see a zone being reached. Remember the current candle on Euro GBP, this monthly candle. At one point, it was bullish all the way like this, right? It was a big bullish candle, right? And when you see that now on a monthly chart, and then you see 1, 2, 3 levels from 2016, I'm not going to include 2010, from 2016, which was the Brexit time. This was the Brexit time when Cameron resigned. When you see Euro GBP, this is for AD. When you see Euro GBP strong bullish like that, remember what I always say, guys. When they are selling, you are buying. When they are buying, we are selling. You see that on a monthly chart. Don't hesitate to open a short position there, right? With your stop loss above there. Don't hesitate. Of course, now it's hindsight analysis, right? But as an institutional trader, using your institutional strategy, do not hesitate to open a short position there, irrespective of how strong that momentum is. You see? Because now you'll be basing on this high, on that candle, right? To say, I know market cannot break. If it breaks that, then I'm gonna accept that I'm what? I'm wrong. If you open a short, if you open a short position, remember, you sell when most people are buying. You buy when most people are selling. That's institutional trading. So if you open a position there, then you see this drop down, then you would have been correct. But if it clears up your stop and then dips down to the downside, that's a clear indication that, okay, you were wrong at that moment in time, but on a long-term perspective, you're correct. Then you'll be anticipating further short trades to the downside. Because now if you go to if we were to highlight, let me see. What was the high of this candle here? It came in at 0.95,200. 0.95, it cleared up all the previous month up until it currently market is below, just below that high. You see, market is, that means last week closed below the bearish order block of what month is this? 2017. You see, last week market closed below the bearish order block of 2017. Of course, I don't know what month it is. You need to, let's see. So it closed below the bearish order block of August 2017. You see, if you see, the high of the current month is below the high of August 2017, which is our bearish order block. Right. With this huge rejection that has happened, I've marked those price points, right? Now I'm going to go to a weekly chart. Now, on a weekly chart now, can you see this is our last up candle, which is coming in at 0.993124. Already we've got a range. You see, it's very easy. We already have a range to anticipate short trades. You see, we have a range to anticipate short trades. Where will be our stop loss? Our stop loss is going to be up here. You see? You see now what I've just done. That's where we're going to be placing our stop loss, because now we are anticipating short trades from a higher time frame monthly order block. Now this is a weekly chart. Now I'm going to go to a daily chart. You see now the rejection that has happened. Now we're going to place our last up candle. This is our last up candle, right? So that means your stop loss is now reduced. You see, the risk is now reduced because your stop loss now is going to be above here in this range. So if market retest 0941, you are expecting 0941 to hold before market goes to the downside. So now short trades are ideal on Euro GBP. Yes, even from current price action, but your stop loss is going to be big. You see, if you short from current price, it means you're looking at a stop of, oh, that's too much. If you short it here, then you're looking at a stop loss of like, is it 0.300 something pips. So now you need to further drop down. You see, because now you are anticipating short trades. Can you see now here? We had this law that has been violated. You see this law, this last down candle. Market has been going up, but now it has turned. You see, there's a new level of supply. There's a bearish order block there. You see, this candle here.
Yeah.
That's where you'll be anticipating price to go
So
bearish.
Is this Ivan, is the one that you sent me earlier on?
Huh?
Is the one that you sent me earlier on? That I said it's a drop, best drop.
This is Euro GBP. Yeah, I think that's I think that's the one you were talking about.
Yeah.
Now you see where the price drop, then we had a base, we had another drop, but now we are correcting back to the base.
Yeah.
So now you need to anticipate, because the further you go down, okay, let me clear up. Let's start from H4. Let me have a blank chart. You see, from an H4 chart, this is our recent. I don't want the line. I want to put a rectangle so that everyone can see. You see, this is a new level which has been created when market is going to the downside. So this is the level that you'll be anticipating to short with your stop loss above this high. You see? So your stop loss is going to be above this high, above 0.933. That's where your stop loss is going to be, and your entry is going to be in between Where's that order block? Opening price, order block, closing price. So 09244 and 09291. In this price range, this is where you anticipate short trades. Now it means you have to go down to a lower time frame. Now I'm gonna go to we're on not H4. Let me go to H1 so that you can see. Can you see now on H1 we already have a rejection of the H4 bearish order block. If market opens the way it's supposed to open, like under normal circumstance, you anticipate the next candle to open here, then it's gonna push to the downside, right? But now the conditions that we are in, it can gap whether both sides up or down, you see. But now, right now, short trades on Euro GBP, because now you can clearly see on H1, on the current time frame which I'm on, market structure has changed. You see, we had this swing high, and then we have the lower low, lower high, lower low, lower high. Market is targeting again back down there. You see, forming another lower low. Market structure has changed now on H1. So we're anticipating further short trades on Euro GBP. Eddie, is that clear for you?
Yes.
Mr. Ivan,
Yes, boss.
we have be wrong if I say the market will spike on that 0.9298 level.
0.929. You mean the H4 order block?
Yeah.
Close it open, Olo.
Yes. You see now, you see the high of the bearish engulf of that order block. You see this candle? That's a bearish of a new supply zone, right? So this bearish engulfing candle has clearly confirmed that we are going to the downside. You see, Eddie called in a position to say, guys, let's look for short trades on Euro GBP, but he was late. You see, his call was late. His call was supposed to come prior to this cross there. I don't know what they call that candle type. You see that cross that came after the bearish engulf. That would have been your entry to the downside. But now, if market rallies all the way up to 0.933, then you need to wait for the close, because that close of a price action which is going to spike this level, it needs to be down here. Because if it closes above here, then this level, it means it has been violated. Our H4 order block would have been violated. Then you can see a push to the upside, this last up candle here. You see? Because we don't see a price action whereby we're going to close higher than 0.9291. If price rallies and closes above here, it means this zone has been violated. You see? So we'll probably be having a bullish engulf of this supply zone. You see? A supply that has been engulfed, then you see further move to the upside. But if it spikes and closes below, then that will be your trigger to the downside. Yeah. Is that clear, guys?
Yeah, it's very Jason.
Yeah. Nice one.
So I think the only
this is nice. Interesting.
the only problem that we have is not all of us are gonna be stuck on the charts to read this kind of price action. So we need to set up an alarm or something, like after every H4 close, then you come and see and look at what the price action is doing. You see, like 7 o'clock, 11 a.m. What is the next one after 11? That's 2 p.m. right? Yeah, something like that. So that you must know where the price action has closed on H4, because that's the crucial one. Because when H4 closes, let's say for instance, a person would have been looking at this current H4 candle, right? Person would have been looking at that current H4 candle. Let's say this is current price action, market is moving. Then you see this close after market has dipped into a strong supply zone. Right, let me go to lower time frame, say 30 minutes. You see, if it's current market price action, I would have been anticipating further move to the downside. You see, I would have been anticipating to sell the asset because they have tested the supply zone and closed below. So I'm anticipating a short trade to this level here, 0.901, which will be coming in at the current price. That's what? That's 180 pips. And my stop loss will be above my supply zone, which is like 100 pips, targeting 180 pips. So if you have yeah, let me see, because now on MetaTrader you can't place a pending order now.
So you can't. Yeah. I was trying now.
If you have a demo C trader platform right now, let me show you. Let me open the C trader. It's opening now. I don't know how long it's gonna take to open. All right, you can see my C trader platform, right?
No.
Okay, I need to share it. Just hold on. I need to share it. New share. Right, you should be able to see it now. So let me open GBP. Where am I? What is it? Euro GBP, right? Then I'm gonna go. Where was my entry again? I think it's 30 minutes. Right. Let me zoom in. Right. I need to open a sell limit order, right? So my entry price is gonna be 0. Where is this one? 0.919. Sorry. 0. Oh no, this is sorry, man. EUR, Euro GBP. Right. I'm gonna open my sell limit as 0.9170. Price right now is at 0.9168, so that's just like 2 pips above, right? And then I'm gonna put lot size 0.5, right? Sell limit, and then stop loss. I need my stop loss to be, where is this price point now? So if I go in at 0.970, so I'll be looking at like 40, let me just say 50 pips. Let me put a 50 pip stop loss. And then my take profit, what is this price area? My last down candle coming in at 170. So I'm gonna put 170 is my target. Right. So I've placed the order. So in a real market price, like when market is open, you'd have opened a straight sell position, you see, anticipating the supply zone on H4, that bearish order block to hold. So you'd have opened a proper sell position with anticipation that market is gonna keep going to the downside. Are we together?
Yeah.
Boss Moja.
Yes, boss.
When you go quiet, then I think maybe something is not right. I don't know why.
No, I'm following, my brother.
So we're gonna see how this price action is gonna go on Euro GBP H4. Then we'll see how it works. Any other question, guys, before we wrap it up?
USD is awesome.
Yes, this did you see?
Niggas going up.
You see what I told you? That's exactly what's happening, Boss Moja.
I've got a pending order 820 rand there. When is 20 rand is gonna hit?
No, that's too far.
Is it too far?
That's a sell limit, right?
Yeah, sell limit.
No, that's too far. You should have put it at 18.
No, okay.
Yeah.
I'll readjust.
20 rand is a bit extreme, bro. We can't be that in shit now.
Oh, but you see, we're still waiting for the president. So that means there's more bad news to come.
Yeah, I was
With the
waiting
dollar.
for him today. He didn't come. He postponed. He said tomorrow.
No, this president of ours lacks discipline.
So
He must not.
So 1788 on USD is still a target. The price is gonna reach that point. That means 18.
Because I saw Friday close at 1760 something odd.
Yeah.
I wouldn't be surprised if it opens up with a gap to the upside.
Yeah, we just have to wait and see, or maybe to get to the downside and then rally all the way to 18. But hey, that's bad news now for us.
Yeah, it's very bad news.
Yeah, that's not good news. That is not good news. Yeah, so rand for now, if you have a sell limit at 18, yeah, that's a good setup. But
my worry with it is that this virus, it seems to be getting more stronger and stronger. So I think it's going to bring more weakness to the rand. Yeah. So that was my school of thought behind the 20 rand. Because remember now, they've just confirmed 38 new cases now. So we are sitting at 270 odd. This is not even within 2 weeks.
My goodness.
Yeah.
Take care of yourself, guys, especially those guys who travel. Taku, please take care of yourself, bro.
Yeah, so we are about to see hell very soon.
Yeah, so you must just take care of yourself. But 2020 is a bit high at
it's
this moment.
Extreme.
Yeah, 2020 is
you know why I'm saying that?
Yeah.
If you look at the situation in Italy,
yeah,
it with 2, the numbers were 150 odd.
Yeah.
We are at week 2, we are almost approaching 300. No, I'm serious, my brother.
that is hectic, eh?
That is hectic. And if I look at the social behavior around here, the South Africans are not moved, my brother. They want to see the effects first before they can start. This social distancing thing is not working.
Yeah, it's not working. No, the authorities, they just need to...
They just need to enforce it, my brother. That's the only way.
They need to act quickly, and the Reserve Bank is letting us down. They only cut rates to like 3%. I thought they were going to go to 2 or maybe 1.5. But still, they're not...
But yeah, we'll see.
Yeah, we're going to see. But right now, 18 is a target. 1788, 18 on the rand. If you're going to long rand, that's your target. But I can see them reversing a bit. Market can correct to the downside, but it all depends now with DXY. If we see a strong dollar, then ZAR is going to take a hit. Yeah. Right now, I think we need a weak dollar at this moment in time. We really need a weak dollar because things are gonna go haywire. I really feel sorry for those old Madalas that were 2 years or 1 year to retirement. It means their paychecks have taken a huge hit. So yeah,
I know their stuff.
Yeah,
their stuff.
So the long-term effects, they might be not now, but for us now, guys, we need to anticipate a bear market coming on the dollar index. Recession is on the way. So we need
Yeah.
to benefit. That's how we can benefit. Yes, many people they are calling for buying stocks and everything, but it's not ideal at this moment because the effects of this corona they are not yet full blown. I think it can get worse. So let's be in a position to anticipate to benefit from it.
All right, boss.
Any more questions, guys?
I'm good, my brother. I'm good.
Boss Wilson.
Thank you so much. I think that was a great Zoom.
Yeah. You mustn't follow someone like me, bro. You must sleep. I saw yesterday you're also up at 2 a.m. You're busy like me, night owl.
Man. Look, I'm on quarantine leave for like 30 days, so I'm not sleeping. So, yeah.
Boss Eddie, any question? Oh, Eddie, they say his mic is not responding. Anyway, that's much about it, guys. So let's just be alert to those levels that we have mentioned and give each other a heads up in the group so that we can make a decision quickly.
Yeah.
All right, boss.
Thank you so much, sir.
All right, guys, sleep well.
Sleep tight,
Yes,
guys.
boss.
Be safe
All right,
out there.
We're waiting for 12 o'clock. We can't sleep yet.
it's too
No, we
early
can't.
to sleep. It's too early to sleep.
It's too early to sleep.
Sharp.